And so after falling for the most part of 4 years, the Nigerian Stock Exchange in 2012 has recorded a fairly convincing rally that has gathered more steam in the past few months, with the all-share index rising to a 21-month high.
It's useful to break it down into maybe quarters. So Q1 we saw what I guess felt like a typical rally, and then that quietened off a little bit. Then the Q2 results started coming out, and some of the doubts that people initially had about whether the Q1 numbers were real, those started dissipating away. And then the expectations that Q3 results would be decent also started supporting the market. So we got a bit of a surprise, a positive surprise with Diamond Bank's result, and that basically led people to believe even more. So the fundamentals were supportive. I think if I just start with the banking sector, the cleanup that started, I would say probably even 2 years ago, is I think the biggest driver for this behind this rally. Now, you didn't really see that impact share prices properly last year or the year before, but this year, the signs were there that we could see a very strong rally, and already the numbers are good enough to make you feel that the rally is justified.
The gradual change in investor sentiment is reflected in the growing transactions attributed to local investors. At the lowest point of the market slide, foreign investors were thought to account for as much as 90% of average daily trades. Over the last 3 months, the market has gained over 20%, and local investors now account for about 30% of trades.
At one point in time, my phone hardly rings, but now a lot of people are picking up interest. They're calling to find out what is happening in the market and obviously looking for opportunity.
What you're seeing is you are seeing the local investors coming back in. And recently, we understand that from 2013, PENCOM is going to allow the PFAs to have different, more portfolios. And one of the portfolios they would have, one of the funds they would have for young people, will be able to invest up to 50% of the proceeds of that fund in equities. So there's only one way I can see more participation by the PFAs, because right now they're restricted to 25%. They're doing maybe 10% on an average. All of them are beginning to buy because we have some of them as clients, so we know that they're looking at the market.
Those that have sat on the sidelines, I think, are still scared because their last experience of the stock market was very painful. So they're going to take a while to come into it. But I think that the last 8 months, the move has provided them with some confidence that it wasn't just a flash in the pan going straight back to 20,000. And I think once again, they look at all the ancillary problems and say, but how can this market be going up? The reality is that if you wait for everything to be fixed before you invest, you're going to miss the boat. The train is already moving out of the station, and even though the rails up ahead may not all be in place, one would hope that they will be by the time the train gets there.
But the long onlys, the more long-term focused investors, yes, they've done very well this year, but you're not seeing them exit. They're still holding to most of the names that they like. So if you look over the last few years, the performance haven't been, in some names have been okay, but broadly speaking, emerging markets going up 10%, 12%, yeah, you would probably want more. So this year is one of those years where they've been vindicated for sticking to Nigeria. And there's no sense that I'm getting that they're tired. They feel like this rally is justified, that going forward, there's no need to panic over any major rally in any names. In fact, when you put up names that have gone up, let's say 60, 70, 80% in the last 3 months, they would say, well, yeah, it was trading well below where it should before. So I think now we're getting close to where this maybe should be trading this year. But, as long as there's no major problems globally, we don't see a major recession, China doesn't slow down aggressively, then they're happy to keep holding these names.
The big question investors are asking now is how far can the market go? Some analysts say the move is just getting started and should pick up as more local investors come back to the stock market.
My view is we're right at the very beginning. I mean, if you've got an S-curve that is going to take 10 years to complete, we're in year 1. And I would say we're not even 10% into that S-curve yet. The real big moves are going to come over the next few years.
Beyond the support that local investors can give to the market, low yields in most developing economies mean that foreign portfolio investors will continue to seek higher yielding opportunities across the world.
Currently, if you look at Europe and the United States, cost of capital is fundamentally zero. And when cost of capital is zero, you know, risk starts to be priced differently. So if you take a look at countries that have printed money since the financial crisis of 2008, like the EU, the United States, their stock markets have done incredibly well because people are looking for value. There's no yield, you pile into the markets. I believe the S&P 500 has actually surpassed its 2008 highs as of today. And now, as people are now looking at, as the numbers start to come in and people start to believe that the rally is over there, overdone, everybody is starting to go out and look for yield in other places, which means that Africa, who for this particular point in time has been the most fiscally conservative continent. Even if you look at China, China spent a lot of money reflating its economy. In Africa, we didn't print money. So we've been the most fiscally conservative continent. We have not seen the rises in asset prices. So it is now starting to attract a lot of attention.
A lot of people are looking at Africa, especially Sub-Saharan Africa. And if you look at Sub-Saharan Africa, especially outside South Africa, Nigeria is a place everyone needs to be in. And so almost by default, a lot of investors are looking at Nigeria from that point of view. Because the emerging markets has been the only real bright spot in the kind of the global downturn. And for a lot of investors, especially in the developed world, there is a search for yield. And that's why, for example, fixed income yields in not just Nigeria, if you look at Kenya, Uganda, their bonds were doing double digit and they had foreign investors coming in. So looking for that kind of yield. Then more like portfolio investors are looking at the equities and looking at the dividend yield some of these equities are giving and the growth story in that and from the base of where they come. Because if you look at the average Nigerian stock, the share price is a penny stock for most of these investors. So it's a punt they're willing to take.
Another likely catalyst for the NSE going forward is the reform agenda of the market authorities, which include the reinvigoration of the local bond market, a move that could draw even more eyeballs to the cheap stocks in the equity markets.
So we're actually running a program as we speak, where we're going to actually be able to trade bonds. So you and I on the street can actually buy bonds and trade them on the floor of the exchange. Prior to now, as you know, you have to have 100 million naira minimum to go out in the market and trade bonds. So you've got to have the big ticket items. We're hoping to have that launched this year. So there's a lot of work going on in the background. It's a very heavy lift, and we've seen a lot of excitement within the broker-dealer community. As you probably know, we're making a huge investment in our technology infrastructure. Yeah, that investment will do a number of things for us. It will enable us to actually have a proper 21st century technology, which allows us to leapfrog from where we are today. It will allow us to be able to disseminate our market data, not just at the institutional and professional level. We have plans to disseminate market data right to the man in the village, yeah, so to speak. Yeah, so we're building those infrastructures, and those will have very, very positive effect, we believe, in terms of financial literacy, in terms of accessibility of our capital market, right from the bottom, right to the top of the investment ladder, so to speak.
In the next year, we're going to have a very robust trading platform. I think people looking forward to this realize as the trading platform strengthens and as the governance strengthens in the market, more and more investors are going to feel more comfortable coming into the market.
Underpinning the growth story of Nigerian equities is the local economy.
Some of what we're seeing with the privatization of power, we will see that reflect in how companies are doing going forward. The port reforms, where today our ports are open 24 hours a day, 7 days a week, we'll see some of those business condition issues, some of those constraints that we saw in the past for companies, we'll see them start to take effect going forward.
Nigeria has to be your first point of call. You know, Nigeria means business. The Nigerian capital market means business. We are looking through to build the capacity required. I think our track record speaks for itself in terms of what we've achieved over the last 18 months. We've got a lot of more to do. But if you take a step back and you look at Nigeria as a whole, you know, I think the population, the increase in literacy rate, the dynamics of our economy is such that any real serious investor looking for growth, looking for diversification of their portfolio, and looking for, if you like, a market within perhaps stuck currently between the frontier and emerging markets, but clearly making its way into the emerging market, you know, can definitely be part and parcel of that story.
We have today 5 million retail investors. The potential is enormous for people to take advantage of the Nigerian capital markets for wealth creation.
The performance of the Nigerian stock market in 2012 reflects its growing popularity in the context of frontier markets that have become the target of global portfolio investors. Many observers of the NSE say it has finally turned the corner, with local investors that shunned the market for the most part of the last 4 years gradually joining the party. The continuation of a reform program designed to create a world-class market would hopefully keep the bull market on track and vitalize the brokerage business of traders like Yomi Adeyemi, who are confident today that the good times are finally back to the bourse.